Well, it's festival time and it doesn't get bigger than Diwali as far as India is concerned. We are here on the streets of Gurgaon trying to find out what's happening on the ground, and suddenly we can actually find none other than our market friend Sanjiv Bhasin, who is outside a restaurant, Punjab Tadka. Sanjiv, firstly, happy Diwali to you, your family. Can you just talk to us about this Diwali? What are you doing special? After 2 years, we've seen it open up across the city, the country. What is so special that you're doing?
Yeah, so first to wish you and the entire team at ET a very, very happy Diwali, your family and friends. I think this Diwali is unique. There's been 2 years of lockdown and now you're seeing the robustness in any street and any market in this place in Gurgaon, where we think this is the food capital of Gurgaon, and that is where we are seeing the type of footfalls we've never seen. So I think it's a robust Diwali. Ignore the bond yields and the dollar and you'll really see the type of spending pattern is just starting. So very bullish on the markets, and the local consumption is going to be the flavor of the day, month and year.
So we are here in Bani Square. We have various kinds of restaurants. Can you just tell us that we are in Punjab? We are in Gurgaon. What sort of food do you recommend people? What sort of things do you recommend during this Diwali one should do except sweets?
Well, I'll recommend Punjab Da Tadka, my own restaurant, and the best Punjabi food you've had. So let's start by eating over there and take it from there.
Well, we've ordered for some nice chaat and Punjabi food, but meanwhile, till the food is coming in, can you just tell us that if we use a food analogy, people have had that left out feeling as far as Indian market is concerned, especially large institutions. They've been talking about valuation. FIs have been selling in. So can you just tell us that what would be 1 or 2 large cap stocks that you have in your portfolio that you would recommend people over the next 1 year, and where this miss out feeling itself, if flows come in, could lead to a re-rating? What will be a one large cap pick for that?
So I think ICICI would be the top pick. I think it has been a stellar bank as far as the liability franchise, the NIMs and the asset quality. And we can see, Pankaj, retail flows are have been the savior of this market. And I think ICICI is now taken the template from HDFC Bank after the recent merger and so on. I still think ICICI Bank can give you a 30% upside from there. You can also add an Ultratech Cement, which I think numbers were slightly below because of the extended monsoon which we had. But Ultratech, with 120 million tons of capacity and having the best pricing power, would be another of my two. So these two would be my top favorites in the large caps.
So, let's talk about each one of them separately. Now, when we talk about ICICI, that's a complete overweight name with mutual funds. FIs love that stock. So, one is, in food analogy, something which everybody likes. So, probably that's the roti that you would want to have. And then you have Ultratech. It's been 6,000 for a while. A lot has changed in the sector. They have announced capex. Margins have been slightly lower. So, one is, an absolutely stable stock. And second is, a proper cyclical which can do well. So, can you just talk to us about why do you like ICICI despite everybody being bullish, and why that contra view on Ultratech?
So, ICICI, why? Because in an environment which is volatile, I want safety first. And especially for the retail investors or the institutions, they would prefer safety first over return later. And ICICI fits the bill perfectly. It was under-owned for the last 1 year. It has come back with stellar numbers. And I still think ICICI is going to go to 4 digits and beyond. So that would be my top pick on the safety criteria. Ultratech fits the bill because if you see across the board, whether it's road infrastructure, it is ports, it is inland road transport, commercial, residential, you cannot do without cement. And there's a cartelization as far as cement capacity goes. There are no new capacity come in the last 20 years. And Ultratech has arguably the lowest cost of production and the best reach. I think at these multiples, given that the worst of the extended monsoon is over, you could really see big outperformance from Ultratech. And I think a 25% upside by next Diwali is very much on the cards.
So when we talk about Ultratech, can you also just talk to us about the new player entering the cement space? How will it change the thing? What essentially to watch out for?
Yeah, very good point. So see, in a week, the Adanis picked up 85,000 crore worth of wholesale stake in ACC Ambuja. Now, it means that they have the additional advantage of 38% of cost because of logistics and power. But I think there is so much of such a big demand for cement that all these existing players are making money hand over fist. So there will be a little bit of competition maybe on the distribution side, but I still think Ultratech will be able to continue to hold the major domo stage and be the numero uno as far as cement goes.
Right. So when we recommend a portfolio, we always suggest it should be a mix of large cap, mid cap, small cap names. So we've spoken about two big large cap names. Now, if you see what we are eating, it's actually a chart. So if we just take this chart and probably try this, it's actually pretty spicy. So what will be that main spicy stock that one should have in their portfolio? Maybe 1 year, 2 year, 3 year, whatever could be a horizon. But what is that one spicy stock that one should have?
So Pankaj, simple case, which airline did you travel by?
We came by Vistara.
Okay, if this is Vistara or Indigo, Vistara is preferred.
Tata or Indigo? Tata Airlines or Indigo Airlines?
There is no bigger play than Indigo. They've gained more market share on the SpiceJet fiasco, and given the reach which they have, I've been traveling for the last 16 weeks. I think Indigo is a no-brainer. On the fact that domestic travel is at its highest, I was going to Amritsar on this Saturday morning at 6 o'clock. I've never seen so much rush in the airport. And Indigo has a very, very good cost advantage of being a very unique airline which runs with no freebies. Given the spice which you are looking for, I think it can come from Indigo. Right. I wouldn't be surprised if Indigo hits all-time highs in the next year, given the volume, the yield which they are looking at, and given the demographics of India itself.
Right. But, when we talk about Indigo, there are always so many variables, what's happening with pricing of tickets, what's happening with demand, what's happening with crude oil. How would you essentially, pick that stock? Or you would just look at it for 3 years, it's done nothing. And probably now if demand comes back and pricing is stable as it is, one should look at this name.
So Pankaj, if I recollect, 1 year back when people asked me a topic, it was 140 and Indian Hotel. That time nobody was talking of Indian Hotel. You have no imagination what vengeance spending can be. And if we see US and UK, there are no visas, but domestic travel is going through the roof. And I have no two ways to think that Indigo will gain market share, sheer volumes, and given the uncertainty of crude with which they are hedged, these are small variables, that's why you're getting it at the price where it is. I think it deserves a price of close to 2,400 by next Diwali, all things going, as per cues.
Okay. Let's talk about, the next pick that you have. And, whenever we have seen that when we were in this Punjabi Tadka place, and whenever we eat Tadka wala food, we eat kebabs, in the night you get a heartburn. Most of the times you get acidity and you get heartburn. So which is the stock that will not give you that heartburn? I mean, you can easily sleep over it. Which is one safe stock, decent returns that you would say, maybe ITC, HUL and Nestle. How would you essentially look at any of the safe stock in the portfolio that will give you a good sleep?
So safety comes with a little bit of risk, but if I had to say a safe name, it would be DLF. Now, arguably, DLF has been a relative performer. Even when it falls, on worst case times, it doesn't break 340. But if you just see their sheer land bank, the type of construction activity and the realization which they've seen, it has never been in their history. They've almost become debt-free, 80% debt has reduced. If I told you, on the first Shraddh, they launched, new floors to be sold. Before the first Navratri, they had sold 1,800 crore worth of new, 290 flats they have sold.
Yeah, the new one which they launched,
290,
right?
Correct. So I cannot say safety, the volatility, but given the type of pedigree and the demand for fixed assets in the shape of real estate, DLF is going to go all gun blazing. So I would be a little bit more risk taking and take DLF as my Tadka stock.
Right. But when we just talk about, DLF and how things are moving in over there. So interest rates are going up, which is a very big parameter over there. Everybody is just talking about, affordable housing, cost of production, cost of housing is going up. You think these variables don't matter over a medium term of time when you look at such a stock like DLF?
So they do matter, but in a marginal way. What has been the experience of real estate in the last 10 years? If you went for an under-quality stock who promised a lot but delivered, you would rather stick with a Godrej or a DLF because there is pedigree and slight bit of heartburn on rates is not going to be detrimental. People want quality, they want the promise of a given house when they want it. So I definitely think DLF is going to fit all guns. And this is a myth that input costs in fact have fallen 30% in the last 3 months, and I still think that they will have the biggest advantage of resale sales.
Right. We're now getting some kebabs over here, so let's just try them. And when we just look at kebabs, you always, as you just told us right now, your first pick was ICICI Bank, which is a safe stock. Then a great Birla company, which is Ultratech. Then you came up with Indigo as one of the wild and spicy stocks that you would have. And then a DLF stock, which will give you stable returns because of the sort of cyclical up move it in. So all of these are large cap within their sectors. So, one kebab out of the way, a small cap name, which can really be a wild pick, but it's a must have. So, you may even allocate only 3, 4, 5% of your portfolio. But the chances are that if things go well, it could essentially do very well. So, what would be that one, kebab in your portfolio that you would want to have, which is, a mid cap name which can do very well?
So it would be Canfin Homes. I think the numbers were very, very smart. They have a book of 40,000 crore and a market cap of 6,500. They've assured us that there is an external CEO which is on the way. It will come by the end of next month. Plus, I think the reach in the 8 lakh to 15 lakh space, they and LIC have a lion's share of the business. So I'm very, very positive on Canfin Home. I think it can be such a big dark horse, and it can give you a 50% return from this Diwali to the next.
All right, Sanjiv. Thank you so much, Sanjiv, for taking out time for us. Once again, happy Diwali to you, your family, and all your friends and family.
Same to you, Pankaj, to you, ET Now, and all the viewers and retail investors. We wish them a very happy, prosperous, and investment Diwali for the next year.
Thank you so much.